Well, hello, good morning, and welcome everyone to the AgYield War Room. It is a beautiful Thursday, July 25th here in the western suburbs of Chicago. And if you don't know me, I am AgYield's marketing manager and everyone's favorite backup host, Jack Coakley, filling in for Dan today. Before we get started with the guys, as always, feel free to join the discussion any way you can. Post a comment. We'd love to hear from you and answer any questions you may have live on the show. You can always reach out to us at info@agyield.com. Enough meandering from me. Let's kick it over to Brian for some overnight numbers and some thoughts.
All right, thanks, Jack. Good morning, everybody. Overnight numbers last night: Dees corn up a penny and a quarter at 4.19 and a quarter. No beans 10.66 and a half, up 2.5, and Dees wheat down 4.5 at 5.66 and a half. USDA just reported a flash sale of 264,000 metric tons of beans to unknown. So that's a good sign. So it looks like China might have continued their purchasing plan here. So we'll see how this kind of plays out for today's open. On some other reports, second quarter GDP came out. U.S. economy grew at a 2.8% pace, better than expected at 2.1 for the second quarter, led by consumer spending. Was helping that number be inflated than anticipated. Going to some export sales for this week. Corn, I'm starting off with corn, 23-24 marking year came in at 331,400 metric tons, kind of on the low end of the estimates for 24-25 marking year, 745,000, better than expected on the estimates range there. So that continued probably purchasing from China is helping that out. Going to beans, old crop beans, 88,600. That was on the low end of estimates, and new crop beans, 829,700, right on the top edge of the estimates there. So good to see that on corn and beans for new crop. On the wheat sector, 309,300, probably on the low side of the estimates there. And heading over to meal for the old crop, 258,100. That was in the mid range of the estimates. And for new crop, 520,000. That over exceeded any estimates on that front there. So looking like at these levels here, demand is definitely picking up. So we'll see how this kind of plays out today. It's good to see corn has been up 3 days in a row and see if that can continue for a fourth day here.
Thanks for that, Brian. Let's shoot it over to Ben and get some of his thoughts.
Morning, everyone. I think we're in a spot here where we have some uncertainty for the weather. Looking like August is going to heat up quite a bit. They did put a little bit more moisture in from the GFS, probably contributed a little bit to yesterday's sell-off in beans. I think the market is kind of in a vice here, on breaks until we see a shift in the weather pattern. We probably find some buyers willing to step in and maybe cover some shorts. And above the market, we probably have a hefty amount of offers, and particularly in old crop corn. And then again, we feel that the producer is generally undersold in corn. Their appetite to reward the market at below break-even costs may give us a little bit of room should this weather stay kind of negative and we start maybe shaving some of that top end yield off. But again, weather models can flip. We've seen the same thing in the last 24 hours of the GFS being a little bit wetter than the euro, and now the euro is starting to slide towards the GFS. And that's the same sort of action we've seen pretty consistently throughout the year. So it'll be interesting to see how that plays out. It's good to see new crop soybeans being sold. We need to do that. We need to participate. So I think that we may be in a little bit of a vice here. I don't know that anyone's going to be overly compelled to get aggressive buying corn in particular. But, when people want to get out of a trade, they get out of a trade. We tap the 20-day moving average. We get another 20-25 cents to get to the 50-day. So I don't know that anyone's going to be real excited about going after that at this point. So I just kind of expect market to be bid on shallow breaks, and I expect offers above until we see a little bit more clarity. And I know that sounds very simpleton, but it's probably a place where it's not a super committal trade from either side because of where we're at in the calendar year and the thoughts that we have a pretty good crop. So I think maybe we're stuck here for a minute.
Thanks for that, Ben. Rylan, let's kick it over to you and talk a little bit about livestock.
Sure. Well, it was nice new highs for the move here in hogs and cattle. We're starting to see things kind of pick up a little bit on the cash market side. Looks like northern trade, which to be expected was a little bit easier so far, but a little bit of 308 on the dressed. But we're still seeing beef prices continue to edge lower here. Choice down to 312.68, and choice was down like 270 yesterday. So still dealing with lower beef prices. It seems like the market's we've seen some bids, some early bid activity in the south. So it seems like packers were starting to eyeball a little bit more aggressive kind of purchases early in the week, which, it always gets the market whooped up whenever we start to see bids that early. Just from the way it's acting right now, I mean, definitely pretty good. Overall, we're starting to trend a little bit better, and we had the deep discount on the board. I think what's the right basis is kind of the question everybody's asking right now. Now that we've kind of made this move, but we're really just not that far off of contract highs right now. You look at August, and we're like $6 within reach of those contract highs. So I think that's something to keep an eye on. I mean, the trajectory is still pretty good in futures. It looks like cash is starting to level out, if not north starting to come down. So it just seems like there's a lot of options on the table right now. Just looking forward. So we'll kind of see how it progresses. On the export side of the market, net sales were 13,400 metric tons, still down 13% from last week. So just nothing really to write home about from what it looked like ostensibly there. On the hog sector, still this big short covering rally. Open interest was down 1,400 contracts, so it feels like we kind of got the bears on the run here, just with the better performance in cash than expected. Carcass kind of coming up here. We're back up to 104.76. That was up $1.26 yesterday, so belly's back up to 140. I mean, we're seeing quite a bit of an uptick here. It's just the question is how long can this last? So we've seen this before. A lot of times you get this really hard press kind of going into August, and then you start to see things start to taper off. So this is probably a good opportunity to start looking at margins, especially kind of in the back end of the market, October, December, anything going in Q4, just in case we start seeing things start to peter out a little bit. But export sales were good, kind of reinforces this rally a little bit. 30,200 metric tons, that was up 28% from the previous week. Still down from the 4-week average, but it seems like business is just kind of picking up a little bit. So it all looks pretty good right now. Like I said, it just feels like we're trying to get the futures market whooped up a little bit here on the meat side, and we'll see if that's going to continue here into the latter half of the week.
Thanks for that, Ryland. I know Dan is probably watching right now and probably has a million questions about retail beef. Are we at a $1 fillet yet, or what's going on?
Oh
there?
Man, we're just not going to talk about retail beef. I don't want to disappoint Dan here. So, I mean, there's definitely good features out there, but trimmings and grinds are holding the world together right now. We're just not seeing a big down in those meats right now. I mean, we're pretty much in peak seasonal burger demand time frame right now. This is it. I mean, after maybe we'll start seeing some retail weakness after Memorial Day. That's what I would hope. But that's post grilling season activity. So we'll see how that goes.
Let's hope. Let's hope for Dan's sake.
Let's hope for Dan's sake. Yes.
Any other parting shots, guys, before we call it a day?
Go on. Sorry, Bryce.
No, I was just going to shift back to grains. Just kind of adding on what Justin and Jason was saying earlier this week with with old crop on hand. Basis is looking pretty darn strong here. SEP's holding that $4 level. Historically, basis is usually option to maybe a little under. You're getting like 20 to 30 over. So you're backing up to almost 440 cash here. So something to keep an eye on, just to get a little more revenue on hand. I think that's more important than anything. It might not be the price that you've been, initially looking for, but it's just going to get that cash in hand. So something that I just wanted to bring up. And then Ryland, I know we were talking yesterday a little bit about, technical that you were seeing out there in the corn market as well.
Yeah, I mean, nothing too major here. I'm not the greatest technician on the planet, but it just, and Dustin made comments about this in the newsletter last night, that just we're hitting these kind of interesting retracement levels. We ran right into the 25-day. I mean, there seems to be a little bit more optimism with the forecast, just overall, just with this, kind of hotter and drier pattern. Kind of feels like we're starting to exit out of the weather market a little bit, maybe the tail end, and maybe just trying to kind of digest a little, some of the other news that's coming our way at this time of year. But it just kind of feels like we are hitting some pretty important technical levels, and just talking to producers and guys that have that kind of plan A marketing strategy, which is just like, where should I sell this market? I mean, we're on a 14.5-cent rally this week. I mean, obviously, like, the market's handing us a little bit of a win here. And I think it's up to everybody just to kind of look at, hey, is this going to help, margins? Is this going to, slow us down? I mean, there's a lot of decisions that can be made. At least we're kind of moving in the right direction. So I think it's a good time to have those conversations. What are we looking for? Adjusting yields for potential. I mean, it seems like just for the most part, the growers that we're talking to in the Midwest are really seeing some pretty spectacular potential out there. I don't want to say it's just a layup. I mean, the weather is still a huge X factor right now. I mean, we've seen some really powerful storms. Anything can happen, on that front. But I think it's still just even if you have some kind of lofty goals, at least kind of try to define those, going into the tail end of the season here.
Yeah, Eastern Corn Belt basis, I think we see an exaggeration as we get closer to the end of the year of moving grain from the 23 crop. And in the West, they have strong basis. The East is still terrible. We're 10 under. And over time, as we get more depleted in the West, where we didn't have as good of a crop, versus in the East, where we've had, we've said before that there were 55 million additional bushels in the state of Ohio this year. Grain is moving freely over here. And our guys from the Eastern Corn Belt would love for you to send some of that 20 over to our area.
Yeah, right, for sure.
So,
well, and I don't know. I mean, I was looking at the news this morning, and it kind of looked like, at least there's a ton of stuff about wheat. And I think that's kind of a big focus right now, just because I guess the Wheat Quality Council's 3-day tour just ended, and they're saying that yield potential just after 8 stops was like 56 bushels per acre versus, it's up 41 bushels an acre from last year. So, I mean, it feels like just the narrative in general is changing, from a U.S. supply standpoint. We don't have, the same kind of tightness that we're seeing here domestically, so it really feels like we need to ramp up some export sales to kind of clean some of this up for the most part. But, we've commented on it multiple times, with just what the spreads look like in corn and, they're looking like in beans. It just doesn't make a whole lot of sense, with what's going on. So I don't know what to believe right now, unless you got some thoughts, Ben. But
I look at grains and, I think that we've had a retracement that we could have had without a hot and dry forecast 10 days out. Beans with a record short, rally 50 cents off their lows pretty quick. Corn still just, 16, 17 cents off its lows here. And with a near record short as of Friday, I could make the case that we are underperforming with what we had going into this week. So I don't know. I would have thought maybe a little bit more strength. Maybe it comes today or into the weekend. But those big shorts are vulnerable when the narrative changes. Has the narrative changed? We're going to know, in 5, 6, 7 days. Weather's probably going to flip 3 times. But to this point, we really haven't seen a massive short covering event in the corn. So I question whether or not it's going to come or not. They're on the clock. We've mentioned that taking a big short position the first week of July, last week of June, had some risk to it. So, hopefully we get a chance to shake the tree a little bit and see some better values going into fall.
Yeah, I mean, and you would think that like if we saw just big downs in open interest right now, that's going to suggest that we're starting to short cover, on these move higher. And open interest, at least in corn, was up 4,600 contracts. Beans was up 1,900. So I mean, like, doesn't look like we've really spooked them out yet. I mean, we're only running into the 25-day. I mean, I would think that start to see some real panic above those levels. But we shall see. But it looks like we're coming right into the open, boys. Looks like to start here, D's corn's up 2 1/4 at 420 1/4. No beans, we're at 1070, up 6 1/4, and D's wheat, we are down 4 1/4 at 566 3/4. So looks like we made it to the open.
We did it.
Safe and sound. Yeah.
Yeah, safe and sound. I was going to start asking you questions about your favorite and least favorite Star Wars movies right away. So this
I
works.
mean, there's not enough time for that, Jack. Sorry.
Anyway, well, if you like what we're doing here on the show, feel free to subscribe to us on your YouTube page. It really helps us grow our audience. It helps us with the YouTube algorithms, get the word out on the War Room to more people on the platform, and as well, it helps you out get notified when we got a new upload, got some premium content out. So it costs you nothing, and it's a 1-second thing and helps us out a lot. So please, if you're feeling generous today, subscribe to our YouTube channel. That's going to do it for us here today. As always, we're streaming live on Facebook, X, and YouTube. So watch us anywhere you can. We'll see you tomorrow morning, 8:15, back with Dan, and hope everyone has a great day.
Thanks, Jack.
Thanks, Jack.